Lacey, I'm super excited to have you here today, and you're going to be telling us about DSCR loans. And I'm excited to learn about that because I think in this current environment, there's a lot of opportunity for this. So could you just maybe start off by introducing yourself, tell us a little bit about you, and then I'll get into some questions about these DSCR loans.
Yes. Hi, my name is Lacey Stone, and I'm a loan originator with Motto Mortgage Signature Plus here in town, Port Orange, Florida. I have been with Motto now for 2 years, and we are going to share a little bit together about this loan product that not a lot of people are aware of. So,
all right, great. Well, I'm excited to have you on here, and I think this will help real estate agents out there generate more business, offer value back to their customers. I mean, I think there's just a lot of opportunity for here, and I'm really glad you're taking the time to share some with me. So if you'll start off by just telling me, what does DSCR mean, or what is a DSCR loan? What's the first thing we need to know about it?
A DSCR loan stands for Debt Service Coverage Ratio, which means in short and easy term that if you're purchasing a home as an investment property, then you can go off of the rent schedule, which is along with the appraisal, you get a rent schedule, it goes off the market rents, and that's how you're qualifying for it. So the debt service coverage ratio is covered by having the rent cover your mortgage.
Okay, great. So debt, like when you're talking about investment loans, debt means mortgage. So you'll hear that a lot in those investment things. So the debt is just going to be covering your mortgage. That's pretty simple and straightforward. What type of investor is this best suited for? Is it good for a small first-time investor? Does it need to be a large investor with lots of properties? Like, what do you think is the best fit here?
This specific loan can be for seasoned investors, which is super great for them because if you do own multiple properties, then you do not have to provide all of the documentation for every single property that you own, as if you were going straight forward with a standard conventional investment purchase. You would have to provide mortgage statements, tax bills, insurance information for every single property that you own. So if you go DSCR and you own 10 properties, you are only providing your home information for your primary home. That's it. So it's super great for seasoned investors, but it's also very good for first-time investors. There is no reason that a first-time investor cannot use the DSCR loan.
Okay, great. So it's great to start off, and definitely great if you have a lot of mortgages, you start to hit that cap because, you know, I've heard that a lot of times you can't have more than 5 mortgages and so forth. So obviously this product is different than that. And if you needed to have 10, 15 mortgages, you'd be able to do that. Is that correct?
That is correct. And another good point to know too is if you're buying, you know, for people that are doing Airbnbs, short-term rentals, vacation homes, whatever they're doing, we can help you in 27 different states. We do not have to be licensed solely in Florida to help you buy your investment or your vacation homes there.
Okay, so that's super cool. So you can handle these loans in 27 different states. That's great to know as well as you're building out a portfolio as an investor. So let me ask you a little bit about qualifications then. So is this a lot harder to qualify? Does it require a lot more documentations? I mean, it's already like when you fill out a loan application, sometimes I feel like it's just, you know, it's a painful process for me to go through and do that. So with the DSCR loan, is that going to be a more simple process, a more stringent process, or what does that look like?
It is actually a more simple process because, again, we're not utilizing any of your own income. We are not utilizing any of your already owned property information. You have to have a 620 credit score, so same as going conventional. Obviously, the better your score, the better your rate will be. But no, it's definitely a more simplified form to purchase a home.
Okay, great. And then here's probably a catch. What about down payments? Do I have to have huge down payments? Is it kind of like a traditional conventional loan? What does the down payment on a DSCR loan look like?
Pretty traditional for an investment purchase. There are some lenders out there that will do 15% down. Now you're going to take a hit on the rate and you're going to have mortgage insurance. So most investors, whichever route you're going, 20% down is usually the standard. You will get a better rate starting when you're put 25% or more down. That's when you see a significant difference.
Okay. And how do these rates compare to like a regular loan rate? If I was going to go ahead and do just a regular loan, are they going to be a big difference between them, or are they pretty competitive?
They are pretty competitive if you're in the investment side. So you can't compare it to a primary home purchase, of course, because no matter what way you're going, if this is an investment home, they are very comparable to regular, straightforward going conventionally investment purchases as well. There's nothing huge about that. Again, your down payment, your credit score, and going off that rent schedule, that will play a role into it too. So as long as we have enough in the rent schedule from the appraisal that shows that we're covering your mortgage, then that's another pro to get a better rate as well.
Okay, great. And so then what about interest only options? Like if I'm really tight and I have some kind of interest only, might help me make the cash flow work a little bit better. Is that an option? Are there balloon payment options? Like what else is available with these DSCR loans?
Another thing to know about them is the ARMs, fixed rates, 30-year terms or less. Another big thing with investments that some people may know and most people probably don't, prepayment penalties come along with certain loans. You do not have to have a prepayment penalty, which means that you'll pay it off before a certain amount of time. If you select a 1, 2, 3-year prepayment penalty, even up to a 5-year, those are giving you a better rate for as long as you're going. So if you know you're going to hold the property for 2 or 3 years, go ahead and take that 2 or 3-year prepayment penalty, because again, that's going to reflect a better rate for you.
Okay, so with the DSCR loan, is this something that I can use for a fix and flip, or is this more of a long-term hold type property?
So if you bought a property and you wanted to fix and flip it, you're probably better off going a different route. However, if you're buying a property to fix and hold, you can, of course, then do a cash out refi with a DSCR, and then you're now into your terms where you're either an ARM, 5 or 7-year, or a fixed rate. So it just depends on which route you want to go in that sense of keeping, holding, getting rid of it. There's different programs for that.
Okay, great. So like if I had, so that gives me a lot of power there to be able to think about. So I'm not going to use this to fix, flip, and turn around and get rid of the property, but I definitely could take it, fix up the property, rent it, and then refi. That's great information to know. Excellent. Now, what about then, that makes me think about a vacant property. So with the DSCR loan, if the property is vacant, there's no income on it. So does that mean I can't use this program?
You can still use it because the appraisal is going to give you that rent schedule. No matter if it's rented or not, they're still going to go off the market rents of what it could potentially rent for. So that's still how you will be qualifying for it. Just because it's not currently rented does not stop you.
Okay, so potential rents will go into the appraiser. Now, is it easier if it is rented? That seems like it's probably more of a slam dunk than if I already have rental rates established and so forth. That would be an easier approval process, or it doesn't even really matter?
It really doesn't matter. We can go off the lease or we can go off what the appraiser says, and it's going to be the lesser of the two. So it doesn't matter if it's rented or not.
Okay. And then also on that same line, sorry to beat this one up, but I'm just, I'm thinking of some customers that we're working with that this might benefit. So what if the rents are low, but we see a lot of opportunity in this property where we can raise these rents because the landlord just hasn't done anything with it? So is it going to be based off of what the current rents are and that's how everything's going to work out? Or can I show that these leases are month to month and I'm going to be able to release them at a higher rate and use that potential market rent for financing?
There is room for negotiating. If they're going to be a short-term rentals, then of course that's going to provide higher rents total in the monthly span time than if it's a long-term rental. So there's definitely different ways to talk to the appraiser about which route you're going to go. And again, if you're fixing it up and it's going to be a different kind of property, or the appraiser's coming in saying that that however they determine that their market rents in the area, there's ways around it.
Okay, good. And then I assume, since this is allowing you to do it on multiple properties, I don't have to do it in my personal name. So are there any restrictions to LLCs or corporations or anything like that?
So the loan is always closed in the borrower's name because this is not a commercial product. This is a residential product. So the loan will be closed in your name, but the property can be deeded in an LLC.
Okay, so the lien, I'm basically personally guaranteeing still, but the property can be owned however it needs to be owned as long as the entity is set up right. Okay.
Correct. And if somebody is worried about the fact of having protection for it being a rental and not being sued, the company owns the house. Just because the lien holder is you personally does not give you any difference. You can talk to professionals about that know more about it, but that's how that goes.
Okay, that's great. Now, what about the loan time on this? So is this going to be like I have to have a 45, 60, 90-day time period to put this under contract, or is it fairly similar to a regular loan?
Fairly similar to a regular loan, 30 days or less.
Awesome, great. Well, yeah, I can think about a lot of opportunities where I could use this DSCR loan to help find properties, because with the market in its current condition, I mean, there's a lot of sellers out there that are eager to to sell, and there's prices out there that I think that I could probably negotiate where the rents would cover. And a couple years ago, it just wasn't working that way. So this is pretty exciting. Okay, so then is there anything else I missed or anything you think that a buyer, lender, or agent should know about a DSCR loan other than what we've already covered?
I think we pretty much covered everything. The biggest thing to know is just how simple it is with not needing somebody's income, not needing everybody's properties that they own, their assets. It's a more smoother of a process to go this route. And especially if somebody is an avid investor and they are self-employed and they're writing off a lot of things on their taxes, so their taxes aren't showing their true income, this is a way to overcome that.
All right, great. Well, that was awesome, Lacey. Thank you for all that information. I'm definitely going to be sharing this out there and getting the word out on this. So just to make sure everybody has your contact information or knows how to get a hold of you, what's the best way for them to reach out?
I am always available with my cell phone or my email, so whichever is better for you is good for me.